Hey there, Vinny from Project Frugal. We're going to do a slightly different analysis on this Road to 100k video. This is episode 80. Let's check it out. Into Denise's portfolio, here we go. We've got $75,443.89 whopping cents. The shares he saved now $526 because we have bought some shares. And what have we bought, you ask? Well, let's find out. In the last episode, we said we were going to top the wallet up another $1,000. This is what we do every fortnight. Put the $1,000 in there, moved it to the shares he saved to earn a tiny wee bit of interest on it. Well, that didn't last long, really, did it? Because we took out $7 for the Sharesies monthly plan fee. We transferred all the money, well, $4,007, off to the wallet so we could go and get another auto invest, another deal, another monthly plan, the $7 monthly plan. And then we purchased $1,000 worth of Turners Automotive Group and $3,000 on a single auto invest order, making a grand total of $4,000 into Turners Automotive. Why do we like Turners Automotive? Well, it's simply because it's a quarterly dividend paying stock. And now that we've utilised the Sharesies monthly plan, it's time to cancel it once again. Build up that $4,000, or at least $4,000. We've got $526. We need another 4 fortnights of money till we get up to another $4,000. Unless we get some extra dividends, which puts us sort of over the limit. So it could be 3 fortnights, but there's not a lot of dividends coming in at the moment. Let's have a look here. $148.16 in June left to come into the wallet. That's another, how much is that? That's almost $500 plus our existing $526. We might just get there in another 3 fortnights or another 3 pay cycles time. And then we'll be buying some more investments. Now we're going to change the filter on this to profit loss, highest to lowest. Let's just have a look, see how that pans out. As you can see on this portfolio, Fonterra, we've made $1,459.17 this point to date. And this obviously includes the dividends as well as the capital gains. So that's the best performing stock that we've got in terms of monetary value. ANZ has performed well, Westpac's done okay, another $1,000 there. Meridian, Turners, Contact Energy, Somerset Holdings and Infratil, and then it's a sea of red, all the stocks that have performed, let's just say, poorly at this stage. If we scroll right down to the bottom here, the worst offenders, Heartland Group, Stride Stabled Group, Fletcher Building and The Warehouse, losing a whopping 2245.38. And once again we can change the filter so it is total change percentage. This gives a better reflection of what stocks have really been performing well or haven't been performing well. Because we're dollar cost averaging, we're buying stocks at all sorts of prices as the market determines at the time. So in terms of this, Westpac comes out first with a 33.7% total gain. This is basically the money that it's worth now versus the money that we've put into it. You can see the rest here. We've got Meridian, Fonterra, ANZ, so it's pretty much the same group. It is the same group, potentially just in a different order. If we scroll right down to the bottom here, the Warehouse has lost a whopping 54.79% since we've been purchasing it. Kathmandu has performed poorly, PGG Wrightson. So even though this has only got a balance of $382.70, it has still performed poorly. So I'm glad we didn't put $10,000 into that. Otherwise we would only have $5,500, roughly speaking. Geneva Finance, now something interesting happened with them in the last week. They've decided to put a proposal in to delist from the NZX. I don't know how that's going to pan out with their stock price, but I think we originally put in roughly about $1,000. We've pretty much lost, actually, hang on, looking at this, it says negative $399.70. So we've lost $400 on this. It's only worth $542. We must have started with roughly around $950. We're probably not going to sell it. We'll just see what happens if we lose $400 or another, $542. So be it. Not too bothered about that really. But as you can see, these are the worst performing stocks in terms of this portfolio. Now, will these always stay in the red? Probably not. Eventually the market will come back. We'll be back into a bull market at some stage. Hopefully all of these will be green. And at that point, maybe we'll sell them if they appear to be overvalued, or maybe we'll just hold on to them and just get the dividends. because the vast majority, probably 98% of these stocks are dividend-paying stocks. Be lucky if we've got any actual growth stocks in here whatsoever. So does this mean we should be investing in only these green companies? Well, that's a pretty difficult decision because some of these might be coming up. Who knows what's going to happen in the marketplace? Businesses make decisions all the time which affects their stock price, whether they're down in profits, whether they're up in profits, whether they've got some sort of new technology or some new gadget or widget that's going to boost productivity and boost their profits. Who knows? So in terms of adding the extra $4,000 into Turners Automotive, we've actually got $12,741 out of our total $75,000 in this portfolio into one stock. Is that a good plan? Well, it is paying off essentially because it says we're up $808 at the moment. So yeah, it's a bit of a risk. Like everything, it's always a risk. Changing the filter once more to the market value, you can see here we've got the Turners on top of the pile here. Fonterra's got almost $7,500, Contact Energy $6,700, ANZ Banks just over $6,000. So these are the most heavily populated stocks, and these are the ones that have been winning in the portfolio. So it kind of makes sense that we would probably put more money into those ones. Well, in terms of the market value for these ones down the bottom, it's neither here nor there because there's not a lot of money in them. So even if they were to lose all their value, we're talking maybe, $1,500, something like that. So not a great deal. Moving on to the dividends, in June we've only been paid out $39.02, $148.16 at this stage. Approximate calculation to go in terms of adding to the portfolio or the dividends per month and year for June, which pretty much means it's going to be less than $200 for the June month, which is less than last year, which was $252. So we do have $340 coming in July, which has boosted that up. So possibly one of the companies has changed their dividend payment date. That's highly likely. Compared with last year for June and July, $560 versus roughly around $420. So we have increased $130, $140 odd more for those 2 months for dividend payouts. The share allocation has changed slightly, still the bulk of the money in financial services. Consumer cyclical is coming up the rear there, 26.16%, quarter of the things. With a current recession, quarter of the stock, current recession, it's probably not a good idea to be investing in that. This is the market, this is what the market does. The market comes in cycles. At the moment we're at the bottom of the cycle or close to the bottom, if not the bottom itself. Things will improve over time and eventually we will be back into a bull market and these things will be flying, hopefully. Let's hope so. Moving on to the NZX50 charts, you can see the week has been slightly up. The fortnight has been slightly down overall. The month has been pretty much just a little bit above, a bit above break even, if you want to look at it that way. The 6 monthly, well, it's up and down like a yo-yo, and same with the year. So we've just got to carry on, keep on doing what we've been doing, regardless of what happens in the market. Now, according to Sharesies, we've made a simple return of negative 5.46%. That is not a good return in anyone's books. And if we look down the bottom of the app, negative $4,664. Yeah, $4,600 in the red. Not ideal, considering it wasn't that long ago we were up $104, I think it was. One pleasing thing is this is episode 80. We've got 20 odd episodes to go. Let's hope the market recovers in the next 20 episodes. That's 20 fortnights, 40 weeks. We'll be done, or at least close to done, regardless. And if we got 100,000, if we just break even, I'd be pretty much happy with that, because at the end of the day, even if we don't invest any more money, we still get dividends from this portfolio, and maybe we just start taking them out and actually using them for life. And that about wraps it up for this video. This is episode 80, road to 100k, 20 odd episodes to go. Hopefully we'll get to the 100,000, the magical $100,000 mark. Thanks for sticking around, we'll catch you later, and have a good one. Bye bye.